Perfect. Good one. This is Aida, a local real estate agent in the state of Minnesota. And I am a CEO of Gojjo Realty with Coldwell Banker. I am also a team lead with Gojjo. I do commercial and residential. And today we have, as usual, our two guests in our conversation, and they are here to express what they know, how they know, how the process goes. Especially everybody is concerning about down payment assistance. We're going to talk about the detail, how the process goes, and this and that. We won't be able to tell you like, hey, what is in Virginia or what is in Wisconsin, what is in New York, whatever the case that is. So, but we're gonna talk about, the processing. What's the biggest thing that you guys are consider, and what are the stuff that you need to have. So Nick is here. Good morning, Mr. Nick. We were screaming your name with the microphone and all that, You are not around, but good morning, both of you guys.
Good morning, Aida.
Good morning. Who are you?
Oh, I'm doing very well today. How are you?
I said, who are you?
Oh, who am I? Oh, yeah. My name is Nick. I'm Peter's brother. I'm a mortgage loan originator. I'm in the state of Minnesota, and I'm here to help people is what I am. Who are you?
Perfect. I already said it. I asked myself and I answered it, but we can ask your brother. Ask him.
Did you introduce all your titles, like the Queen of America, the best realtor in the world?
I did all that, okay. And I add more into it too.
Perfect. I love it.
Okay. Go ahead, Peter.
Right. I'm Peter with Custom Made Mortgages. We licensed loan officer here in Minnesota. As I always say, for educational purposes only. These are not quotes or guarantees or anything like that. But you guys want to go over this in more detail, you can always message us and we can set up a time to do that together. So we don't charge for that. So yeah, and we can do investment properties in, I think it's like 40 other states as well. Yeah. So if it's true investment property. So yeah, no, excited to be here and have you guys join us and go over all the fun things about down payment assistance.
Perfect. Great. So, as you guys know, while you guys are listening this info, and one thing that we ask is to just tap the screen for us and share whomever that you think that they would be needed at this information. But tapping, my goal is every Wednesday because I'm not here like less than 5 hours. So I'm considering at least 50,000 by the time we leave. Tap, it doesn't do anything for us, but when I come the next time, my screen won't stuck. So if you can do that for us, we'll appreciate it. Beside that, I'm gonna ask you guys, what is down payment assistance program? How did that work? What is the process? Just, let's talk about like as a conversation, because a lot of people think like it is, money that you can get it or whatever. So just let's talk about like literally what is it? How did that work? And then we'll go the other processing.
So you want to take this one, Nick, or you want me to?
Yeah, for sure. So down payment assistance, just in a very simple understanding of it, when you buy a house, you're typically on the hook for two things. The first would be your down payment, and the second would be the closing costs. The down payment assistance is what helps with the down payment part. If this is your first time buying a house, you can put as little as 3% down in most situations for a conventional mortgage, and then you can put as little as 3.5% down for an FHA mortgage. So basically that percentage, so like 3% of the purchase price, 3% of what you're buying the house for is your down payment. Down payment assistance is a program through a lender, a county, a state, some type of sponsoring entity that helps you by either loaning you the money or giving you a grant that you don't have, so you might have to repay it, you might not. But basically, down payment assistance is any type of program that helps you with the 3% you're on the hook for, or 3.5% you're on the hook for when you buy a home.
Yep, and just to kind of elaborate on what Nick's saying, so that is, like Nick said, that's the very general explanation for it. There are programs, I'm sure if you've looked into this, you've heard of programs that will help cover closing costs or will cover more than that 3 or 3.5% down. Those do exist. There are many different programs. If we have any very wealthy people on here who wanted to start their own down payment assistance, you could probably do that. It might be a little work, but you could literally create your own down payment assistance for people who X, Y, Z. And from a legality standpoint, there's things you have to do, but you could set that up and then people could apply for it. So all that to say is, like Nick was saying, there's lender programs, government programs, there's even employer programs. And so if you want to look into that, you want to look in your state, in the city you're looking in, the county you're looking in, because there's all these different things that matter as far as qualification goes. It's not just apply, you get approved, here's a bunch of free money, and you won the lottery. So, and like I always like to tell stories, but one good story I always bring up about down payment assistance is we had a client once, a few years back, who there's a down payment assistance program in Minnesota. It's paused right now. It was supposed to come back on January 30th. Still waiting to hear back this week if it's coming. It usually comes out right on January 30th every year. But they applied for it, and you can get up to $93,000. So it's a lot more than 3%, unless you're buying a really expensive house. And we talked about it. We went over it. We always try to give you the details, the pros and cons, because it's not always just pros. None of these programs are just like, here's free $30,000, see you later. That's not how they work. There's always strings attached. So advertisements always like to point out the best parts of it, but you always want to make sure you know all the different aspects. So we had talked about this, and they're like, yep. Just kept kind of answering like that because they're just focused on the dollar amount that they were getting. It was more than any of the other down payment assistance programs. So, and they ended up getting, I think it was around 80 grand. I think it was $82,000. And that one is forgiven over 20 years. It's a first generation, so your parents can't have owned a home either, things like that. But they didn't want to go through all the details and really figure out every aspect of it. And then when they went and looked at a house, they went through a few different realtors. They didn't like this one. They didn't like that one. Finally, they found one. Never met the person before. They were solid. I like Ida more, but they were solid. But then they started looking at houses, and they did the same thing with the houses. And so a week before the closing, they're clear to close. Everything's good. All they got to do is focus on moving and just don't go, buy a car or go open up a bunch of credit or anything like that. They're going to be good. And they're like, hey, we don't want to buy this house anymore. We don't like the basement. We don't like the yard. We don't like this. We don't like that. Can't live here. The house is too small. And at that point, they're already fully approved. So all the contingencies that Ida's taught you about and that we've talked about in the past, those are all passed. There was no like, oh, well, this or that, and we're going to pull out. Even the down payment assistance had fully approved them at that point, which if you know anything about down payment assistance, they like to take their time and not always very fast, but they had got it done. And so basically they wanted to pull out. And all of a sudden they started bringing up stuff about the down payment assistance program. Oh, well, it takes 20 years before this is fully forgiven. So if we move in less than 20 years, we have to pay some of it back. Now that one, every program is different, but that one every year, 5% of it's forgiven, 5% of the balance. But they started bringing up all these questions that we should have talked about at the beginning of the process if they were a concern. And we went over it, actually multiple times I went over it with them. And it wasn't like they were accusing me of not telling them or anything like that, but I could just tell, and I felt bad for them, but I could just tell they didn't fully think through all the terms of the house they were buying, the down payment assistance they were buying. And I think what happened is that this whole process can be overwhelming. So instead of sitting down and thinking through each step, they were talking to their friends, they're talking to their family, they're talking to all these people and getting all these opinions, and they didn't focus on what they thought about the house, about the down payment assistance, about who knows what. And all of a sudden now it was about to happen, and they realized, wait a second, like, what is my opinion on this? I'm not sure if I like this. I'm not sure if, and you know, and again, you're the one that lives in the house for the next 5, 10, 20, 30, 50 years. You're the one that pays the loan every month. Ida's gone after it closes. You can call her if you have some questions, but she's no longer involved. Same with us. Like, yes, there's loan servicing and things like that. And I was actually helping 2 different clients with that yesterday because they had some questions and needed some help. But you're the one paying this. Like, we're not sitting there going to the house every day. We're not paying this mortgage. We're not the ones that are living our life through these vehicles financially and also where we're living. And so they wanted to pull out of this deal, and basically they talked to their realtor, and I and the realtor's like, they could definitely sue us about this. The sellers were not happy when he brought it up with them. They're like, nope, you have to close. If I remember right, they were buying a house either like the same day or the next, like something like that. So they needed the money. And so they ended up having to go through with it, and they closed it like, all right, well, we don't want to have all these issues. We're just going to buy the house. But they still call me, and that was a couple of years ago. They still call me about every year just to check in on things because they really want to move out of there. And actually, I have 2 clients like this. I have another client like that too that calls me about every 6 months just to check on things because they bought into a twin home that they realized they didn't really like. And so they're really interested in moving up. But there's some things they got to accomplish to get to that point to make it happen. But getting back to this main situation, they're in the house now. They have the down payment assistance. It's worked out, but I guarantee if they came on here and talked to you about it, they would say, we wish we would have thought these things through a little bit more. And it's not to pick on anybody because we're all human, but this is why, like, if you talk to me about it, if you talk to Ida about it, we'll bring up things multiple times, especially us, like when we're talking about the down payment assistance itself, because like I said, that program is forgiven over 20 years. So it is forgiven. There's a lot of down payment assistance, like Minnesota housing, that they even call a grant that are not forgiven. You pay it back when you sell the house. It's a 0% loan. That's a huge benefit, but it's not free money. And I've even had people literally hang up on me because like, hey, do you have down payment assistance? I want 50 grand. Literally, I want 50 grand. I'm like, well, I'm not quite sure if there's a program right now that will give you 50 grand. The Ramsey County one could. Like, I start to bring that up, and they're like, no, I just want 50 grand, and I want the forgiven one. Immediate forgiveness. And I'm like, I'm not sure which, do you know what that's called? I don't know. My friend told me about it. That's the one I want. And I'm like, well, can you go back and ask your friend? I was like, I haven't heard of this one, but this sounds amazing. And if this is real, I'd love to tell all my clients about it and people on TikTok and whatever else. Like, this sounds like an amazing, if you don't have it, then I'm just going to call somebody else. Click. I'm like, okay. So I honestly think they were just making it up, but that's how a lot of people that bring up down payment assistance when we first talk about it, that's their perception because of the advertising, because of, and if you talk to your friends and they get down payment assistance, nobody's gonna be like, yeah, I got this down payment assistance, but man, it takes 20 years to be forgiven. They're never going to highlight the negative side of it. And so a lot of times we talk to people just like this other client, and they only focus on the good part of it, and they don't think about the whole thing until after the fact or it's too late. So I bring all that to say, bring up all of that to say, whether it's with us, with somebody else, to look at both sides. What are the pros and cons? If I'm looking at something that feels complex or is confusing, I like to make a list and just left side pros, right side cons, put a line through the middle. Okay, this is forgivable loan. That's huge. Takes 20 years to be forgiven. All right, I'm planning to live here for at least 5 years. And in that case, even if you live there for 3 years, 15% will be forgiven, but you got to pay back 85%. Just know that. Don't expect to move in 3 years and you don't have to pay any of that back. So if we walk through these things, and I did this actually with that client multiple times and tried to kind of push it more. But if you tell me nope, we're good, we don't want to talk about it, I'm not your dad. Aida's not your mom. We can't tell you like, no, sit down and listen for the next hour. We're going to teach you about this. You're not going to call us back, you know? So we want to help you and we want to give you that information. But just remember, nothing is free in this life. And anybody that's making something sound free probably isn't being fully honest with you. That's just my personal opinion. But yeah, I just wanted to share that story and just kind of like, just to help you kind of think and just kind of look at a real world situation. Somebody who went through this, again, they got a good chunk of money, 0% loan, forgiven 5% per year, a few other different things that are with that. But it wasn't just, hey, here's 80 grand, have a nice life, and that's it. So yeah.
Yeah. That is, that's what I always say. The only place that you can get a free money, not even a free money, free food, is your parents' house. That's it. So there is nothing is free. When you say down payment assistant, what, you have to know what comes with it. The example that you gave, what people see is that $80,000, that $91,000, that $32,000, that $52,000. But that $52,000, whatever the amount, even right now in Minnesota housing, they do $14,000 down payment assistant. We're going to talk about, what are the qualifications that they're looking for and all that kind of stuff. But when there is a down payment assistant, you need to ask what is the pro and con. So what I'm going to ask you guys is, yes, there's a down payment assistant. Yes, people use it, the people that who needs it. We know that me and Peter and Nick, we work with a lot of people that we know that those people need the money. When you need the money, use it. But when you have the money in your account, especially when you have a 401k and when you make good money, when you're looking for that kind of an assistant, sometimes it's not your benefit. So to just ask you guys a question, to have a conversation. So I just wanted to ask the audience, there's 30 some people is here in TikTok. There is 4 people in my YouTube. I don't know why people call me when I'm on live. Some of them, they see these things and they call me to ask me a question. And I'm like, I can't answer the phone while I'm live. I'm using my phone.
Yeah, this is a radio show.
Yep. I keep getting called right now while I'm in here. And like they give my number, they call, and I understand. But I'm going to, I don't want to put it, especially with our city is affiliated with those crazy people. So I don't want to do that in case if my kids call. So, but, what is the pro and con of down payment assistance? What do you see the negative and positive? So let me put my 2 cents that I see usually. And then we can talk about it more detail because you guys are the financing people. You guys do the mortgage and I don't. But when I go and sometimes I go with my client and listen what are those program is. Sometimes, Peter and Nick will approve those things, or the others, other lenders approving it because those are the ones who approved it to do it. So I heard yesterday there is a program that they have in Minnesota. The price is lower. It's a Minnesota housing. And before it used to be 18,000. Now it dropped to 14. And the interest rate close to 1% higher than the market interest rate. And then if you make a certain amount of money, they will put it in your second mortgage, and then you will pay that money with your mortgage. Okay. So
like monthly payment?
A monthly payment, yes. And it depends what is your income is. The other one, they put it in your second mortgage, but when you refinance or when you sell your property, you pay them back the money that you get. That means that $14,000. So they do it two ways. It depends on your credit. It depends, everything has a qualification regardless, right? But that's like something that a lot of people, they don't see it. Just because Ida used it, it doesn't mean that you have to use it. So I see these things on a consistent basis. And there is one program in, I think in DC or Virginia. Someone called and asked me yesterday, and I called the loan officer in there and I questioned. They advertising is 0% down payment. And it takes a long time to get approved. I don't remember, was Virginia, DC, or Maryland, one of those areas. But it has something that it comes with it. And I send that client to the lender that I usually refer to, and I let them to deal with that stuff. So when you see any kind of advertisement or people are saying these things, it's all about a sale. Everybody wants to make their ching-chang. Have to ask what question. You need to ask question. If you don't ask question, you will not know. And it's you all about you focusing the amount money at that time. But I need you to start thinking in the long term. I have that money in my account. Let me use it. Let me not deal with these people. Because one way or another, you will pay 4 times, 3 times the money that you got. So it's not like free. And some of them you have to pay back. Even though that they make money out of you, they still make money and you still have to pay them back. So for both of you guys, when you guys are doing this down payment assistance, what is the positive and the negative? What is the pro and con about down payment assistance?
Yeah, no.
Nick, right before you get into that, I'm gonna let you go with that, but there's somebody asking a question a little while back, so I just want to answer it quick before too much time. So let me scroll back up in here. Okay, so he's just asking, why is it only for first-time home buyers from Tracker? So technically, actually, there are, and we'll get more into this, but there are down payment assistance programs where you don't have to be a first-time home buyer. I would say just quickly, I'm gonna let Nick go with this because we're gonna touch on this here in a minute. But the best programs are usually first generation and through governments or nonprofits because, those have the best terms. First time home buyers, there's also very similar programs to that. Usually the repeat home buyer programs, unless there's something special attached to it, like it's a USDA loan, which is you're buying property more out in the country, or a VA loan, or something very like specific to that type of loan. Usually, if you're a repeat home buyer, those have, like Ida was mentioning, some of the Minnesota housing payment or programs they have a monthly payment. It might only be $100 or $200 a month, but usually those are repayable, and they you're going to pay monthly, and then when you sell or if you make it an investment property or anything, you have to pay it off. So there's a lot of, I'd say again, if you're a repeat home buyer, another factor that comes into that is if you already own a home, it's not really, the best programs out there are geared to help people break generational cycles, especially the first generational program. So if nobody in your family's owned a house in the last generation, they're trying to help people kind of get on their feet and get a house. If you already own a house and you're buying another one, you probably gained equity in the property. I know between like 1992 and 2022, I think the average house in Minnesota went up 300% in value. So you've been paying it off over that 30 years. That 30 years hit, you paid it off, and now your $300,000 house is worth $900,000. Like, so there's a big difference there. So you don't necessarily need it as much as somebody else. But I'm going to let Nick answer that question, and we'll dive more into that kind of thing. And like I said, I see other comment about the VA. There are VA programs. And if you're talking to a loan officer, if you're out of Minnesota, ask them about those, because you can do very little down, if not anything. If you're in Minnesota, we could definitely go over that with you too. But I'll let Nick answer that question. Sorry, Nick, go ahead.
Yeah, hold on. Let me hold Nick. You guys need to tap the screen to 20,000, please. Let's go. The more you do that, it will be better for the screen. Not only that, people that who is planning to possibly purchasing property this year or next year, I want them to be ready. We want them to be ready. So that is something that we are here to help. So one thing that I want you to help me is that, you know, help us to tap the screen and all that kind of stuff. So tap the screen and help us out. We're almost like 50 of us here. All of you guys, let's help each other. Go ahead, Nick. Sorry.
Oh, no, it's great. Yeah, so, I mean, obviously, Peter and Ida are hitting on some really, really great points. And even in the initial Peter story that Peter told, is not to scare, you know, everyone off of using down payment assistance, because like we said, there's pros and cons. There are good parts of it. It's just, we want to invoke thought. We want to get you guys to think through the whole process and be in the best situation. I like to think of down payment assistance like a tool. Right? When you use a tool correctly, it is valuable. If down payment assistance is a screwdriver and, you know, buying your home is screwing in a screw, it's going to go perfectly. But if you're trying to use down payment assistance to get rich quick, it's simply not for that. That would be like trying to chop down a tree with a screwdriver. And so it's a tool that you use correctly. And it's a tool that there's positives and negatives, there's pros and cons. For me, one of the biggest pros and one of the best uses we have for our buyers is if you have the income and you have good enough credit to buy the house and you just simply don't have enough cash on hand, enough money in your bank account to cover the closing costs and cover the down payment assistance, it can be a great tool for you. You know, that's a pro. If you just don't have the cash, if you just don't have the balance in your bank account, you know, and any good real estate agent like Aida is going to negotiate for seller concessions to try to help cover the closing costs. But it's not a guarantee, no matter how hard she negotiates, that you're going to get it, but she's going to try for you. So if you can qualify for the down payment assistance, in that regard, it is a very, very good tool. One of the cons of down payment assistance that comes to mind at first is, you know, a lot of the programs, like Ida was saying, have a repayable second mortgage. So you're going to have, you know, your own mortgage payment every month, and then you're going to have this smaller second payment to repay your down payment assistance. If your qualifying numbers are close, you may not be able to afford both payments, you know, and we always try to put our clients in a good position where you're not house poor, where you're not house broke, where you can afford your house payment and still enjoy a comfortable life. So you have to really, really be aware of any program that is a repayable second mortgage. You have to read the fine print, discuss it with someone like me and Peter, because you want to know, is this program going to have fees that I'm not aware of? Do I have to pay this back? When I sell the house, is this money due? Do they have any equity in my house? Like, that's why it's so important to read the fine print, because like we're saying from the beginning, there is no such thing as free money, but there is money available to help you buy a home. So I'll stop there and let Peter jump in if he wants to.
Yeah, yep. So no, Nick, that's good stuff. And getting more into the depth, into more in the weeds on that. Right before I do, Tracker responded about used it once, mortgages in the last 4 years. So the 0% VA entitlement that Tracker's talking about in the comments that I mentioned too is okay, in case prices drop. Okay, so yeah, so if you're selling your current house and buying another one, then that's usually can restore your entitlement, and then you can do the VA 0% down.
Yep.
There's other, if you have a partial entitlement, depending on if it's not fully restored or not, meaning you like paid off that loan, which if you haven't paid that loan off, then you could possibly be eligible for 0% down. If that covers at least 25% of the new loan amount. There's now we're kind of getting into the weeds of things. So I'd say you want to talk to a loan officer and they'd want to look at your actual, okay, you're not selling. Then yeah, I would say depending on how long you've been in the house, you probably, that partial entitlement probably doesn't cover the full 0% down. But if you talk to a loan officer in Florida, and Ida might know some, I know a guy who was, if Ida can't help you, I can help you find somebody down there too. But usually like the biggest, like I was saying, even down payment assistance, VA entitlements, it's usually meant more to get your first house. Not once you're buying like investment properties and second homes, that's more of a want than a need. So a lot of these benefits go away. Like I don't know there's some very niche down payment assistance programs that you can get on like an investment property or second home, but the terms are horrible. It's basically meant like, okay, well, if you don't have the money, yeah, we'll give it to you, but we are going to charge you super high interest rate, super high fees. You got to pay on a monthly payment every month. And it usually doesn't even work out because, well, one, as a client, I would never do that because the terms are horrible. And number two, the lender, once they add all those things in, unless you make a lot of money, have very little debt, that kind of thing, your debt to income ratio starts getting high where they start looking at you as risky and they don't want to give you the program, so you won't get approved. So all that to say is like, whether it's the VA stuff or something else, it's always meant to help you get that first house that you're going to live in. After that, the benefits go away quite a bit. Now the VA is special though, because for anybody that's military, ex-military, they always try to help you out. So there are still some good programs. We actually closed a refi for a VA this week. That was, it was an ARM. So there's that aspect of it, but the rate was 4.625. Excuse me, I'm got a cold, but the rate was 4.625. I haven't closed a loan with a rate under 5 in like 3 years, probably since like summer 2022. So that's an amazing rate because it's a VA. Now again, it wasn't the cheapest rate, this and that. It wasn't one of those what some people call free refinances where it covers all the fees and everything. Fees are still low because it's VA, but VA has some good loan products. So if you're looking at that, especially to buy a second home with the prices possibly coming down, things like that, I would talk to a loan officer, apply, make sure they do a soft pull if you're not sure if you want to move forward. That way it doesn't hit your credit report. And then have them walk you through those options because they should have all those. And then they can tell you for sure if you qualify for them and how much. Where right now I'm just kind of guessing and I don't want to give you bad information. But I would definitely talk to them.
And with the VA specifically, they're also going to be able to look and see how much you took of your allotted draw money in buying your first home, because you may have some left over, or if you refinance, it'll replenish the draw money because VA is for a lifetime, but there's a limit to what each person gets. So you definitely want to apply.
Yeah, that's another good point. Exactly. So, and that's why I'd say at this point, you probably want to get into the weeds a little bit more one-on-one with a loan officer so they can guide you the right direction on that. And side note on that, a lot of loan officers don't like doing the work if you're not planning to buy a house right now, but good ones will help you. And I'd say be nice to them too, because if you're going to have them do all this work and not buy a house right now, maybe continue to use them. And also realize any loan officer who does that is probably a good loan officer, because they're not just about, am I going to get paid the next 45 days or not type of thing. But yeah, I would talk to them early so you know now. And then if you're looking in 3-6 months, they might have to update your pre-approval, but now you kind of know where you stand. So, that's what I'd say, because I have a lot of people that come to us like, oh yeah, we've been thinking about this for 2 years. We're going to pull the trigger. Let's do it. And then something comes up on their credit report, or they don't qualify for what they think they qualify for. And all of a sudden that's a very depressing conversation, especially, and I don't usually want to throw this in somebody's face, but sometimes I'm looking at it, I'm like, man, if you guys called us 6 months ago or a year ago, we would have been able to get this all fixed up and you guys would be good right now. So, yeah, but anyways, so that's kind of about the VA stuff. But getting back to this down payment assistance, pros and cons. Like I was mentioning earlier, there's a lot of different types of programs. So you have, and Nick had said this, I think I kind of alluded to this, there's city programs, there's county programs, there's state programs, there's federal programs, nonprofits, there's employer, what do they call them, EAH or whatever, they're employer programs, employee, excuse me, employee sponsored housing initiatives. I don't know a lot of companies that have this. I think, I won't name companies, but there's a few. If you can always ask HR if there's anything like that. I would say that's usually, those don't seem to exist a lot anymore, but you can always ask your HR if there's something like that. I'm sorry, coughing too much. And then the other one, I mean, there are some one-off like specialty type programs. Like Minnesota last year, we had a first generation program that was sponsored by a government, through the government. So it's tax dollars. And those programs are usually the best because they're tax dollars. So they're coming from us, coming back to us kind of, to help people out. That one's specifically aimed at helping people that are first generation. And that one, people got $32,000 and it's forgiven in 5 years, which is a pretty fast forgivable period. The worst ones usually with term-wise are, again, if you're a repeat home buyer and you're using one of those programs, or if you're using them where it's going through the banks. Jeez, I guess I got to drink more water. But
I can say cheers.
Yeah, cheers.
I'm drinking my coffee.
Exactly. So those lender programs, there's a lot of lender programs out there that are like Minnesota Housing that the interest rate's usually about, I always tell people 1% higher. They will give you the money. Usually, like Nick was saying before, it's usually 3 or 3.5% down. Some of them will give you another 1.5% to cover your cover closing costs. So they'll give you 5% total. Usually those are FHA programs. There's a pretty well-known one called Chenoa that a lot of lenders have. And they'll cover the 3.5% down payment and then also 1.5% for closing costs. So you basically have to pay 1.5% for closing costs. That's it. Fantastic. If that's all we advertised, we'd get 1 million people calling us. I don't like that gimmicky stuff though. So I always tell people, I'm like, remember this interest rate's going to be much higher. And if you choose the forgivable option, which sometimes they offer, sometimes they don't, depending on the lender, the rate can get really expensive. I looked at this for somebody about 9 months ago. They really wanted to do that. Dead set on doing it. I'm like, well, let's go over the terms first because I heard that first part. No, let's do it. I'm like, hold on, I got to tell you the whole story here. Mm-hmm. The interest rate at the time was around like 6.75 for like a regular loan. FHA, well, yeah, because that was an FHA program. I think FHA was around like 6.375 to 6.5, depending on like credit score and things. This one was FHA. The interest rate was 7.875, and they had to pay $8,000 in buying down the rate because lenders will cap rates. So they're not going to let you take like a 9% rate on that program. They're going to cap it at like 7.875 and then tell you have to buy down the rate for like another $8,000. Well, they're getting down payment assistance, and it was a bigger house, at least in Minnesota. It was like a $500,000 house. So the down payment assistance would be like, what, 15, 16 grand, something like that. Yep. I guess FHA would probably be close to like 18. So they're getting like $18,500 for down payment assistance, but they're paying $8,000 for the rate. So now it's really only $10,000. And it was a 0% loan. So, that part is nice, but they had there's all these other requirements. You have a second mortgage on the house, getting approved through lending and everything else is going to take longer. The likelihood of getting denied goes up just anytime you're applying for basically a double mortgage like that at the same time. But also their payment, first if they just went regular FHA, was, I don't remember the numbers right now. I should know this off the top of my head, but it was like $400 or $500 more a month in their monthly payment. So I'm like, so if you guys don't refinance this for 5 years and you pay $400 a month, 400 at 12 months, that's $4,800 a year. Yeah. Every year, basically $5,000 is costing you. So if you refinance in 2 years, it costs you $10,000 in monthly payments. You just netted zero. Like, so if you really need the money and you really need the house, there's a reason why. Okay. But that program went from being like, hey, we're getting $18,000 for free to being like, oh, if we're don't refinance in less than 2 years, we pretty much lose any benefit from this. And they had the money themselves in their bank account. So I told them, like, if you guys really want to lower your closing costs, we can do something where we take a higher rate and you get a rebate. So we're actually going to probably refinance them pretty soon here. But they did a regular FHA rate, FHA loan. They took a higher rate around 7%. They got like around 10 grand back on the rebate, which it just worked out like that. It usually doesn't work that well to be able to do that. But they got pretty much the same that they would have got from the down payment assistance without using down payment assistance. And yes, their payment's still higher, but it's still almost 1% lower than the down payment assistance rate. And they're not paying points for it. So like overall, the numbers were way better not to use down payment assistance if they really wanted to lower their closing costs and take a little higher rate because they qualified with it. So, and that's what they chose to do. So it was, and again, too, you want to talk to a loan officer because you're not going to remember all this. You're not going to know all this, especially if you're a first-time home buyer. This is where you want to work with a loan officer who, one, understands it and knows it, and number two, is going to take the time to explain it because that conversation is like an hour conversation right there. And also, the other thing, maybe people hate me for saying this, but loan officers usually get paid less on down payment assistance programs. Not all of them, but many of them have caps on commission.
Yep.
Because they're, especially these lender programs, because they're trying to get it, they're trying to get money to the client, and the bank isn't going to take the loss on it. They're going to make sure they make their money. Like Minnesota Housing, I know for a fact U.S. Bank is the one who's the master servicer of that. Yep. They make a killing on those, is what I've been told by people that work in those departments. They love those loans. They make so much money off of them. And so, and that's a whole nother conversation how that all works. But there's a lot of loan officers that basically focus on that program because people like it. They get 0% loan. But we had a client a couple years ago. She was selling her condo or her townhome to buy a house, a single family house with her boyfriend. And she had bought the townhome by herself. Her realtor was her best friend since they grew up together. So she trusted her completely. And I don't know her realtor, so I don't know if it was she just didn't know or if she was just more focused on making the sale so she could get a paycheck, but didn't tell her that this was a repayable loan. But as I told her, that's not on your realtor. A good realtor, yes, they should know the basics of it, but that's a finance thing, and your loan officer should be telling you those things. She and I guess I didn't say it yet, but she thought it was forgivable. So she had about, I don't know, it was like 14, 15, no, I think it was more than that. It was like 15, 16 grand and a second mortgage. Didn't have to pay on it, 0% loan, still better than paying interest on it. But she went to sell her house and she had to pay like $500 at the closing, and she owned it for 2 years. And she was upset. Like she didn't talk to her best friend for a long time because she was so mad at her because she felt like her best friend should have helped her figure that out. And she also used the lender that her best friend was like, oh, I always work with this person. Yeah, they're good. And then the lender, usually what they do is they run through really fast. Yep, down payment assistance, repayable, blah, blah, blah. You don't know and hear all those terms, but they should explain to you, here's the pros, here's the cons. Yes, 0% loan helps you get the down payment to get in the house. You have to spend a lot less because closing costs, you look online, they'll say 2 to 5%. I don't know who's getting it to 2. That's like just even with escrow, I don't know how you can keep it to 2. If you don't escrow, then it might be 2%. That's probably very real. But the other thing with these down payment assistance programs, Aida and I had a client. She didn't have much money. We helped her for like 4 years. She had a car accident, some issues, whatever. Didn't have a lot of money when she finally went to buy her house. So she went to a different lender to use a couple different programs that they stacked on top of each other. So she only had to pay like $1,000 at the closing. But the crazy part was she sent me her paperwork and she's like, well, I've worked with you so long, I still trust you. We just didn't have those programs. So we told her to go to the other lender. and she's showing it to me. Her closing costs were like 5.5%. Usually they're about 3%. And that's including your escrow account and everything else. Title fees, government fees, everything. It was 5.5% because there's 2.5% in additional fees that were tied to this down payment assistance program, basically. The lenders were charging this, that, and the other for. Well, you can do the math. Let's say a $300,000 house. What's 2.5%? That's like $7,500. Yes, yeah. That's a lot of money. Now, it was rolled into her loan, so she didn't have to pay it that day. So she didn't think about it. And her loan officer didn't point it out to her. Because why are they going to point out a negative part of the sale? They're not. They're trying to sell you something. So a good loan officer, they'll show you all of that. Bad loan officers, the people that are just focused on making that money, they're just going to tell you enough to know what you need to know. They'll probably send you a lot of emails with just like hard to read email with all this information in there. It's probably in your disclosures. So if you ever try to go back and actually like get them in trouble, it's in writing somewhere. You should have read it. And yes, that's true. You should read everything, but you should also want to work with people that you trust. So, and I'd say that's one of the most important things. Don't just go with the person that always tells you what you want to hear.
Yeah.
Because you can usually tell pretty quickly if somebody's just buttering you up, or if somebody's actually trying to help you. Because somebody that's trying to help you is focused on the details, focused on making sure you understand it, asking you, do you have any questions? Like, does this make sense? The people that aren't, they're going to say here, yep, this sounds good, doesn't it? And then again, they're just going to run through all the positives. Yeah, okay, yep, let's go. And they're going to get you amped up. And yeah, let's do this. Man, it's going to be so great to buy a house. Like, I just met those loan officers. I got you, girl.
Oh, yeah. That was years ago. So that is something that we just need to know. Down payment assistance is not for everyone. So when you know that there is a down payment assistance, you need to know the positive and the negative aspect of that program. Then you know that you're signing up whatever the case that is that you agree. Just because you don't want it to have this part of the down payment assistance stuff, and they're not going to be like rewrite the rule and regulation about those down payment assistance. A lot of you guys are asking me, so why is down payment assistance if I need to pay it back? Because you needed it right now. Do you needed it right now? Do you have the cash? So I always say that if you have your money, use your own money instead of paying higher interest rate or whatever the case that is. But if you don't have the money, yes, it is a good program for you guys. So just think of it. What it comes with it, what is the interest rates right now with my credit, and what is this? You have to ask questions. So I'm going to ask you guys, most of you guys here, where are you guys are from? Just drop your comment, because we need more comment on the screen. And in the meantime, let's stop the screen. Within like 2 minutes, we'll take question. Let's stop the screen and push it at least like, up to, we have to do at least 50,000 today. So let's stop the screen and make that happen. So Virginia,
I had one little note on what Peter said, and then I got one potential con of down payment assistance that actually you can answer for us as a realtor. But one thing that I will say, obviously a lot of you are from anywhere in the country, maybe some of you are watching from outside the country, and so we appreciate the viewership, and we're talking in general terms because we know that there's a lot of shady loan officers in the business, and we want to make sure you don't get ripped off. We want you to understand what you're getting yourself into. The one caveat I will say And this is something that Peter won't say, but I know a lot of you are Aida's clients, and they may end up buying a house with me and Peter. And so the next time when Peter's going, through your closing disclosure or your loan estimate with you, just understand that we are going to explain every single fee to you. We are going to talk to you about where every cent of your money goes. You don't need to go to Peter and say, hey, Peter, what is this transfer tax? I don't want to pay that. What is this appraisal fee? I don't want to pay that. Because you're not going to get through a whole home process without paying any money. And there's some fees that it doesn't matter what lender you use. It doesn't matter what realtor you use. It doesn't matter what title company you use. These are going to be fees that are part of the mortgage transaction. So while we do want you to ask questions and ask where your money is going, the one thing I'll say for Peter's benefit is you don't have to challenge him on every single little thing. Because we are, and again, we want to earn your trust, but we are going to tell you where every cent of your money goes. We pride ourselves on that. The one con that I wanted to ask you about, Aida, and the potential con of down payment assistance. So hopefully you guys are getting the message, which is if you need the money, you have the income, you have the credit, but you need the money, you should absolutely use a down payment assistance program. If you already have the money and just don't want to spend it, it may not be the best option for you. And one potential con is, Aida, you have a client, he comes to you, says, Aida, I want to sell my house. Can you list it for me? What do you think I can get for it? And you list it. And somebody comes in and you get two offers. And one of them is conventional. Conventional, 10% down, close in 25 days. And the other is FHA, down payment assistance, close in 45 days. Which offer are you likely to accept?
I consider that I let that my seller to make a decision because to me, it does not matter. What matters is we looked at the terms. The terms that they're looking for, okay, yes, they're an FHA. Yes, they will close in 45 days. Like Peter, sometimes he closes in 30 days, sometimes in 25 days. You never know who is your lender. And the other one that we usually look at is like, what are the contingencies? So we have to make sure that to look at all the terms. And there was a time that we picked an FHA deal because, they have an ability, they don't have a house to sell. They wanted to buy. The one that were conventional, they have to sell. So if they're selling, if their sale is not going through, then they won't be able to purchase the list price that the property that I listed. So there's terms that we looked at, and I usually put together like an Excel sheet. What is FHA, what is the conventional, what is another conventional, what is the other FHA. We put all that together and see one, as a seller, we always look at what the net profit, what are they getting regardless. So that is one. And the rest of them, it goes with their contingency, it goes with their inspection period time, their closing time, and how many people are involving in the offer and the selling, buying that thing. Sometimes they have a co-signing, and the co-signer might gonna walk away from the deal at the end of the deal. So I have to investigate all those kind of stuff from the lenders, because I talk to the lenders whenever I received an offer. I talk to the lenders, like what Peter does, you, Nick, do. Whenever I get an offer, you guys call. Whenever I put an offer, you guys call and talk to the listing agent. So I wanted to make sure the listing agent to talk to, and this and that. So my main thing is I talk to the lenders and get that information, and then we put the terms, then we make a decision. I don't like discriminating by their financing. A lot of people do, but we looked at the terms, and I will let my seller to make that decision, not mine. Most of the time, the listing agent make a decision or let the seller, they should take this. I don't. I list the property and I tell them, hey, this. I send them the paperwork. We'll have a conference call. We talk about it, or we put it on Zoom call. We go page by page and look at it. Who does and what. Sometimes they're like, okay, let me sleep on it. Let me figure it out. Then they'll make a decision and they will come and say, hey, what do you think about this thing? And if I have to put my 2 cents, and I'll tell them, I think this might be good for you than this, but you can make that decision. But we, as an agent or as a seller, we should not make a decision by people's financing, because that is really, really not a good thing. That's not an ethical.
No, you're absolutely correct, and that's absolutely how it should be, and that's the right approach. I will say that from our end, I mean, and as you mentioned, we do, a call of confidence every single time that one of our clients puts an offer in. So we're going to call that listing agent and we're going to talk up our clients. We're going to give them certainty of close. We're going to talk up their financial profile and let them know, hey, they're fully vetted, they're fully approved, we can get this closed in this much time. We do that. Sometimes you run into trouble because for a couple of reasons. The first being that FHA appraisals and conventional appraisals are not created equal. FHA appraisals are a little bit more stringent and with less leeway. You may have to do more work fixing up the home in order to get it approved for an FHA loan. The second piece that we run into sometimes is a lot of agents like to price their listings so that they are hoping for multiple offers so that somebody can come in above asking. And the hard part about that is when you're using down payment assistance at times, you're not really for sure going to be able to go a lot above what the asking price is or get the financing for it. So you can be capped a little bit in that regard too. Now, you're not wrong with anything you said, Ida. That's absolutely the right process. But from our end, we do see some difficulties winning multiple offer situations with people that have down payment assistance. That is just a reality you need to be aware of. It may not come up for you. It may come up, but I think we'd be wrong to not mention it. And so that is one of the potential cons, even if it's not the end all be all.
Yep.
Yeah, and I just say too, like living in the real world, because Ida and I, we both know there's a lot of loan officers that, like Nick said, are a little shady, realtors that are too, and just people in general, like you. Like Ida has to be professional. Ida has to be balanced. She can't discriminate. Same with us. But if you're selling a house and you're in that situation, and let's just imagine all the terms are very similar to the same. Like, it's human nature. You want to sell to whoever's more likely to get approved. And like I was saying earlier, you have 2 types of loans that you're getting approved for, and you're buying my house. And I'm in this business, and I see this all the time. And then I see somebody else over here who's putting down 20%, and they have no other contingencies except the appraisal and the inspection. It's human nature to say that one's going to be easier to close, and it's going to get my money faster. Like, if I'm going to get my money in 25 days versus 45 days, I'm going to go with the one I can get the money. Like, who's not going to do that? So, but Ida gave you a very good insight, though, into how she does things differently than a lot of realtors. Because I know a lot of realtors that would just be like, no, like, don't even look at the down payment assistance. And that's not right. But we also don't have a camera watching them, so you can't prove that that's, like, that's how they're thinking. So, like Nick said, just be aware. Just be aware of this, because back in like when things were really hot in 2021, 2020, 2022, before the rates really went up, anybody that we had down payment assistance, it was really like I had one client, we were trying for many, many months. They just kept losing every deal because of it. Now, right now, we've kind of evened out, and it's winter in Minnesota. So, and if you're in other parts of the country, especially south, it's become very evened out, if not a buyer's market. So those things might not come up as much. But like Nick and Ida have both said, it's good to see this from every angle, because this is one of your biggest financial decisions of your life. And you want to be able to see everything that's going on, not just focus on like we've been harping on, oh, there's this money just sitting there and, kind of having this fantasy that somebody's just going to walk in and give us money for no reason. So,
So I just got a question here in YouTube. What they say is, how do you know that if I am receiving a down payment assistance when I put an offer? Okay. I'm going to answer that question until you get to 30. This is actually a great question. How do seller agents know that you are getting a down payment assistance? And so if you guys tapping the screen, let's go to 30 and we'll talk, or even 25, 27. Sorry. So this is a good thing because a lot of people, they don't know that how we'll be able to know. And because there's a way. And that's our due diligence that we have to let other people know. So let's stop the screen, get to 27,000. If that is possible, I think you guys can make it. Let's go. I know Peter is doing it. Nick is doing it. Who else is doing it? I can see. Okay, there's like, what, 41 people. Where are you guys? Hand. Let's go. Just tap the screen. Screen mata. My
hand check.
My big forehead. Let's go. So it's coming. You see? It's almost like 25. So as an agent, if Peter is buying this property and I'm listing it this property, and then I got what? An offer. Okay. You guys are stopping. So I'm going to stop. There's only like 3 people tapping the screen. Let's go, family. Let's go. Tap. As soon as I tell them to tap the screen, there's like 10, 12 people just disappear. We're giving it to you. Free information. You crazy. Okay. So if Peter putting an offer and Nick is his lender, I am the listing agent. Okay. So if I get the offer from Peter is agent in Minnesota, I'm talking about only Minnesota, I don't know other state, in our purchase agreement, it used to be written that you're taking a down payment assistance. So that's why it was so hard for us to put an offer in the pandemic time. So they changed our purchase agreement in Minnesota. So, but as an agent, did I tell you guys, from like 50 people now dropped to 27 because I asked for people to tap the screen. If you don't need to be here, out. So what I usually do, I will call Nick. Peter is what? A loan officer. I called and I asked, hey, just wondering, what is the process? What is this? Do they have a down payment assistance? So Nick cannot say no. Peter does not take down payment assistance. If Peter is taking down payment assistance, he has to let me know, because if I get the offer for that closing date is for 45 days, I wanted to change it to 30 because my seller wants to close it in 25 days if that's possible. So if that is something that we need to push in. So Nick has to disclose it that if Peter is taking a down payment assistance or not. So that's why we communicate with the lender for us to get this information, right? So the best part of this stuff is for you guys to understand this is a source of a bunch of us that we talk about this thing. So Peter is as a buyer, Nick is as a lender, me as in his my seller is agent, and then Peter has his own agent. So I don't talk to Peter, I talk to his agent, but I talk to Nick, his lender. He's the one that who financing him. So he has to tell me. He will tell me about where are we with the appraisal, where are we with the down payment assistant, they have everything assigned, all this communication we communicate without you guys even know about. So when people say this thing to me, that's what it is. We are connecting with your lender. We get that information regardless. When you buy, what is it? When you sell, what is it? What it comes with it? Who is the buyer that buying it? Some other places, you get discriminated by how you look. That's something that I want you to think. Just because you are in the US, nobody's gonna discriminate. Let me tell you a story. And our old partner, he passed away, Ali. Peter was his partner. When I had a client who I was showing property, she was selling a property, the same area where she lives in. I'm not gonna name the city, but she's buying a bigger townhome. She have a 2-bedroom, no basement. Now she's gonna start working from home, so she wants to have a basement. Her nephew will come and stay with her, so she wants to have 3-bedroom and a basement with 2 bathroom. So guess what? She have a hijab. We went and put an offer every single time we were declined. We were asking overprice. So she decided to put her hijab on, and she just put it as a scarf and walked in that property. We put an offer, got an accepted. She told me, you see, Aida, I did not even notice that. She told me that. So this kind of stuff, it can happen. It does not about your financing. It can be how you look and who you are. So you have to be ready for those kind of incidents when that happen. But not always. It can happen, but not always. So with your down payment assistance, we communicate. We know. And the way that we know is that we communicate with the lender and we know exactly what are you looking for. Because if I wanted to shrink your closing date from 45 days to 30, then if Nick called me, no, we cannot do that because Peter is taking a down payment assistant, and the process takes a long time after we get a purchase agreement. So because of that, we cannot close in 45 days, but I will try my best to close it before. So on the purchase agreement, you can say such a day before. I always do that. Sometimes Peter comes and say like, oh, Aida, we can close it in 3 weeks. And I'm like, we put on the purchase agreement this. And he goes like, yeah, you said before, so we'll be able to. So we communicate with the seller and with the buyer. If they wanted to close in 3 weeks, we can close in 3 weeks. So there is a way for us to know as an agent, if you listed up, if you're buying a property as a listing agent, I communicate with your lender. Your lender has to tell me. Is that right? Yep. Perfect. In our last segment,
one thing really quick on that note, Aida.
Okay.
There are situations we've run into where the 45 days, it takes to close a lot of these has worked to our advantage, because agents make them list their house before they take them out house shopping. So it's possible that we might be putting an offer in and they haven't found the house that they want to buy. So they want them more time. So there's a couple situations where the longer closing time has helped. They don't want to close in 20 days. They don't want to close in 30 days. They want a little bit more time, or so that there is certain times when the longer closing time has helped us.
Yep. So we talked about today, what's down payment assistance. What is the good and the bad and the ugly and the best part of it, right? So my questionnaire with that for you guys, do you think it is a good idea to wait until there is a down payment assistance to purchase a property? Would just put yourself in that position? And is it a good reason to hold off?
Yeah, so I would, if I answer this one, I would say, going back to the same thing we always tell everybody, buy when you're ready. And the reason I say that is and start with that is to remember that is like the overarching thought with this. If there's some really amazing program that is guaranteed to come out and this and that, and it's all going to be free, you should wait. But I've never heard of a situation where anybody can guarantee free money is coming out in the future. So that's not a real thing. So if you hear people talk, oh, this is coming, oh, do this and this. Ida sent me something recently from a realtor around here who's advertising a program that is currently closed. That is really disrespectful in my opinion, because he's getting people to call him. He's getting them all excited. Yeah. And then at some point, he's going to drop the bomb on you that is actually not available right now. Or when you call, he's, oh, I'm just trying to get you set up right now. No. Maybe. I don't know what's going through people's minds. But most likely when people are doing that, it's to get you to call, oh, man, that program just ran out of money. But we have something else. And then they try to flip you to a different program because it's a sale. They got you to call, boom. So if they can get you to call them, that's the goal. That's the point of everything they post. Excuse me. So it's just, how do I get people to call? We even had a side note. We had a lender who gave us this free AI system last year. It's supposed to help, reach out to clients, give them updates on things. It was just harassing people and being annoying. I didn't realize it already went live with everybody. Anyways, it called a few people. They were like, Peter, what the heck? I'm like, yeah, that's not us. We're not these lenders. They're going to have AI calling you all day long, making claims, saying all sorts of random stuff just to get you to call us back. So we turned it off. And the lender's like, well, that's a good thing. You got people to call you. You got people on the phone. That's the whole point. And that's literally the whole point. And that program is being used by, 100,000 plus loan officers right now, at least, that use that system. And the whole point is to get you to call them so they can make the sale. To me, there's no humanity in that. It's all numbers. If we wanted to do numbers, we would go work at a big lender because they can make more money there, to be honest, and have less headaches. And I can be done every day at 5 o'clock. And anybody's calling me, sorry, I'm not working. Call me tomorrow, Ida. Call me tomorrow. It's the weekend. Good luck. You ain't going to get me on the phone. Closing, not going to be there because I am over in Maryland and you're closing in Minnesota. Or I just don't want to waste waste the time, however you want to say it, to come to your closing because I got to go try to close other sales because I already got you. I'm already getting your paycheck. I'm on to the next. If that's the people you want to work with, that's up to you. But that's where, when it comes back to all this, you want to pay attention, listen, and you can tell right away. Most people, you can tell how they're presenting to you, how they're talking to you, what they're telling you, if it's wholesome or if it's just a lot of sales tactics.
Yeah.
So yeah, that's what I'd say about that as far as how that goes. Yeah, I don't know if you have more to add to that, Nick.
Yeah, basically echoing what you said. It's I wouldn't, unless there's a guarantee, I wouldn't wait and hope a program opens to buy. If I have the ability to buy now, I'm going to. If you wait until every single aspect of the housing market is perfect, yeah, you'll never buy. So you buy when you're ready. And if you're ready to buy a home, if you're ready to buy a bigger home and upgrade, if you're ready to downsize, do that now. Don't say, oh, the rates are at this or the rates are at that or there's not, this program available. If you're able to do it, then do it. You can always refinance. You can always sell your home and move to a different one. But if there's a house that you like that you can afford, I say you move on it right away. Now, if there's a guarantee, if you know for a fact that this program is going to be open at this time and I have this much money waiting for me, then yeah, you can wait. But so many things are not a guarantee and you don't want to let good houses pass you by. If you bought now in Minnesota, you're going to find a better market than if you buy in a month from now. You're going to find less competition than if you buy in a month from now. you're going to find better prices, better rates, potentially, because so sometimes waiting is beneficial, of course, but you can't predict it, and it's unpredictable. So you control what you can control. And so unless something was guaranteed, I wouldn't wait if I had the ability. But again, we're not in the business of trying to push people to do things that they're not ready to do. But if you're ready to do this, then the time is now. So I mean, our ultimate, I think if we had 2 points today, one would be buy when you're ready to buy, and the second would be if you need the money for down payment assistance, it's a great tool. But if you don't necessarily need it, it might not be the best option.
Yeah, and another thing to add to that too is if you're not sure, because most people aren't sure, even if you know your finances, your credit score, all that, talk to somebody, get pre-approved. We actually have a couple clients right now that are waiting for down payment assistance, a couple of these programs to come back because they don't have much saved up. Finances are tight. There's a couple other things. So if that's the case, then yes, but they came to us, we got them pre-approved. We looked at, okay, if we don't use down payment assistance, here's where you're at. If you do use down payment assistance, here's where you're at. Like one client we have has about $5,000 and it's really hard for them to save. They just having a baby, all these different things. So for them, it's going to be a great program. Their purchase price is going to go up almost $100,000 from what they can buy with or without down payment assistance.
Yeah.
So for them,
actually, Peter, that's a really good point, and it's one thing that I was going to mention earlier, because like there's a lot of people that would say from the outside that would say, if you can barely afford to save money, why would you buy a house? Why would you be looking at buying a house if you can't save enough money for a down payment? And here's the reality of things: is even with the rates at 6%, your mortgage payment is probably going to be the same or less than your rent currently. In this current rental climate, it is not cheap to rent a townhouse. It is not cheap to rent a house. You may be saving money by buying a house on your monthly rent. The mother of my kids rents a whole house. And for what she's paying for the whole house, she could just be paying for her own mortgage and saving money. And so part of my thought process with that is you need to take a hard look at your finances. And like this is exactly what it's available for, is people that are renting and paying a lot in rent that could be saving money by having a mortgage payment. But you might not be able to save money. Like you said, you might have kids. Everything's expensive right now. So that's what this is for. That's who this is for. Sorry to cut you off, but I wanted to say that earlier.
That's another good point. And again, assess. Like if you notice a trend through everything we do on TikTok, it's always talking about how are you going to make a decision if you don't know what you're dealing with? You don't marry somebody without knowing what type of person they are. You don't just walk around like, oh, they're cute. Oh, they're hot. I'm going to marry them. Like that's one pro maybe, but you got to figure out everything about them. It's the same thing with your finances. And again, this is not a $50 purchase. A $50 purchase, you make a mistake, you buy something stupid that doesn't work. You're like, okay, I'm out $50. You don't want to do that with a house. Ida, I could tell you stories. We can tell you stories about people who bought houses they should have never bought because they worked with bad people who didn't give them good advice, or they just arrogantly ignored everybody's advice because they thought they knew everything. And that's how people end up in foreclosure. That's how people end up, even if they didn't end up in foreclosure, they end up stuck with a house they don't want. They can't sell it because they're going to lose money. Things like that. We have a client from a few years ago, kind of was in that boat. Didn't want to listen to anything I had to say. Yeah. He knew everything better than I did. He's super genius. I'm just some idiot loan officer. Okay, that's how you want to do it. That's fine. Now he calls me complaining about it. And I'm not that guy who's gonna be like, yeah, well, remember, but I'm like, dude, you didn't want to have this conversation. Every time I brought this up, you were telling me that didn't apply to you. So, and he literally told me, he's like, well, I've been doing, I've bought houses longer than, I think you've been in this business, because he owned his first house like 40 years ago. So he thinks he knows everything. So I'm like, okay.
Yeah.
Good luck, dude.
Is it not so sad though? Because you remember we helped this young lady to purchase her condo, and then she had to sell it within a couple of years after she purchased it, and she lost a lot of money. So sometimes it's good to listen people, especially the people who does this thing day to day. not like to talk to your neighbors and your cousins and your dad or whatever. They can give you whatever their point of view, but you have to talk to professionals that who do these things on a daily basis, because I have 100,000 stories. Yesterday itself, there's 8 different people called me from 8 different states. They all have different stories. So you just have to find a way. What is your story? Make your own story, figure it out, make some kind of decision and write it. Understand the whole process. What is the good and bad about this? What if I purchase this area? What is this? What is that? You just have to find a way. So that is it. I think we're done with this. So if you guys have any question, you guys are welcome to come. I don't know if I forget anything with our list of stuff.
Somebody's waiting.
Oh,
Okay,
yeah. I know her. She's like one of the girl that who get information, to get her stuff situated. Hi, Blackie. Good morning. How are you? You can I know she knows live stuff. She always go live.
Maybe she's in the middle of something.
Yeah. Black, when you're ready, you just can take your microphone off. So anyone who got a question, please welcome to come and ask us question. We have 15 minutes to spare, or 20. Let's stop the screen as well. That at least it can go to like 40,000. It would be fantastic. Our goal is to do 50,000. So just do as much as you can. So anybody has any question in my YouTube account? So we're talking.
While you're looking for questions, or if people have questions, you can join us, write it in the comments, right on YouTube, and Aida can tell us what it is. But one thing I was going to say with this down payment assistance going forward, we're already seeing this, is they're starting to get a lot more strict. Excuse me. The lender programs haven't changed much, but again, those aren't the ones that make the headlines that are so amazing. It's usually, like I said before, the government sponsored programs, whether it's through a nonprofit and they're getting government dollars, or whether, like we have one through a county right now that, like I said, you get up to like 93,000. The one last year that was for the state of Minnesota, you get up to $32,000. That was for given over 5 years. Usually the Ramsey County one has been around for a while. Usually by the end of January, it gets funded. I don't know if it has to do with the partial shutdown. I still haven't heard back from the person over that. Program in Ramsey County when I reached out to her on Monday about this. But it's February 4th and they still haven't been funded. The $32,000 program, that might come back, it might not, who knows? But they're starting to add like income limits to it. They're starting to add additional requirements, like you can't have more than a certain amount of money in your account.
Yes.
The $32,000 program, we have one client that still had it, and they're buying a house right now. And now they added a new form as of in the middle of December, and they forgot to tell us about it. So it's not a big deal, but they want the underwriter to put on there every dollar of income that the person might have that we're not using for the qualification. Yeah. So sometimes they have you have overtime, or you have all this. If they have it recorded, then they have to put on there like, oh, yep, this person makes an extra roughly $300 a month in overtime, but we're not using that on the loan, because they want to know every single detail about your finances, because this is really designed to help people who need help, like truly need help. They don't want people who have $100,000 in the bank and make $200,000 a year to use these programs. And so they're continuing to get more and more strict with them and make the requirements more strict, and also ask for more of view into your financial life about all these details that they didn't used to ask for. So just know that qualifying for it and is important, because of all of that. It's not just like you're going to get approved guaranteed just because it's out. The programs disappear overnight. That $32,000 program was very popular last year. They paused it a couple times and then brought it back. The last time they paused it, we had like 4 or 5 people, and I had 3 clients. I think it was 3 of them, just for us, that we tried to get them to apply. I even went online and helped them fill everything up to start it, but they didn't finish the last part. And like one of them, I think she couldn't find the email or something. By the next day, when we were trying to get it fixed, the program already shut down because so many people applied and all the money was going to be gone. So those 3 people all lost out. One of them, he was, I think he was driving his semi truck, so he was working. So he put it off for a couple days. He missed out on it. He had been waiting for 4 months or 3 months, something like that. The other one, she'd been waiting for a while, like many months. Excuse me. And all 3 of them. So stay on top of it. If you are going to use these programs, expect to have additional requirements. And because all those things are going to come up. And what's happening in 2026 going forward, we don't even know for sure which programs will be funded like that, if they'll get funding again, if they'll be paused for a year, if they'll be closed. So, excuse me. But yeah, so just take all those things into account. And if you are going to try to take advantage of them, make sure you respond quickly, like I said, because those 3 clients now, they're still waiting. They're waiting for another program to come up because they don't have much money for a down payment. One of them only wants to buy a house if he can get down payment assistance. I personally would say that shouldn't be your only reason, but he has the money. He doesn't want to spend it. So he's like, if I can get a good down payment assistance, I'll buy it. Otherwise, I'm not going to do it right now. That's your choice. Our opinion doesn't matter. That's your choice. We're just here to guide you. But now we've missed out on it a couple times. Last spring and in the fall when it came back for a day. So take advantage of that stuff when it's there, because also these programs could come back this year and they might be gone. They might not exist next year. So I got another client like that. It was a year and a half ago. We were putting offers on houses using down payment assistance. They decided to pause it. Now they still want to buy a house. They had another kid. Now there's nothing there for them, and because they were being really picky. And the realtor, she took them to like 40 houses. Never. They were looking for a $500,000 house for a $300,000 budget. So so there's just a lot of things there, and just that's again goes back to the assess period. Talk to your realtor, assess from the real estate side. Talk to your loan officer, find somebody you can trust, communicates well with you. You guys get along, and you feel like they're being honest with you. Assess your financial situation. Get the full picture. Get the picture if I do down payment assistance, or we call it DPA for short. We use that. Well, if I don't, what do those 2 situations look like? Me personally, when I bought my house, I know every program. I didn't use any of them. You can ask Ida. And I don't think I've ever told Ida this, but I had another realtor that would have done it for like $10,000 cheaper. But I used her because I trust her and because this is a huge financial decision. I wasn't going to be cheap and just be like, oh, let me go use this other realtor. It's going to give me this deal, whatever. Try to give me realtor credits or whatever else. Like, no, I use the realtor that I work with a lot and known for years because I know she's going to do a good job. I know she's going to go through everything and do all that. So once I get the house, I don't have to worry that something went wrong. Because if you know Ida's story, that's the whole reason she got into this business. She had a realtor that didn't treat her very well. And she was like, I think I can do a better job and help people. So, yeah. So all
do we have a guest, Ida?
Yes. Yes. Salam.
How are you doing, guys?
Good. Meta voice. How are you?
I'm doing great. How are you guys?
We're doing good.
So maybe like my question is out of your topic, but can I ask you, like, is that okay?
Yeah.
It's about housing. It's not like, but it's not about this topic. Like you say, understanding a down payment or something. But my question is, if I buy an old house, like, and if I want to remodel it, what is the option, like, with the realtors? I have to collaborate with the bank, or can realtors?
Are Are you purchasing cash or are you purchasing, like, are you gonna get a loan or are you planning to purchase cash?
Yeah, if I already purchased the house, old house. So if I wanna make a remodel it, so how you gonna help me? Like what I have to do?
So just to be clear, do you own the house currently and you want to remodel it?
Yes.
Yeah, I own the house. Yes.
Okay. So So there's a few different things you can do. There are Fannie and Freddie, which are the conventional loan. Those are the two entities behind the conventional loan. They have a loan product. Not a lot of lenders have it, but definitely, I mean, it's definitely out there. Just it depends if the lender carries it or not. It wouldn't be too hard to find. I'm sure somebody. Did you say you're in Maryland? Well, I know you're on mute, but yeah, wherever you are, there's going to be lenders. Virginia. Okay, yeah, there's going to be lenders that have it. And all you do is just call them and say, hey, I want to do a renovation loan, refinance loan. And what they do is they look at the future estimated value that addition is going to give your property, and then they can look at lending based off of that. Now, the rates will be a little bit higher, things like that, because it's based off the future. It's not going to be best case scenario usually. It could depend on lender and the terms, also how much of the loan you have paid off, and how much more you're going to take out. If you have a significant amount of equity in the property, you could do something as simple as a home equity line of credit, a second mortgage loan, a cash out refinance on your first mortgage. If you have a low first mortgage interest rate, you probably don't want to change that, but you could get a second loan, or you could get a HELOC, a home equity line of credit. And then if you have the equity, well, if you don't have a ton of equity, then like I talked to somebody a few years ago, they had about a $400,000 house. They wanted to add 2 bedrooms. They were going to do a lot of work, but the house they estimated was going to be worth like $750 when they were done with it. So that loan program, they looked into that. I don't know if they ended up doing it because they weren't working with me. They're in another state. And I didn't talk to them. They never heard back from them. But you could do that program. The other thing you could also look at is every once in a while, the city or the county you're in, they'll have sponsored programs for renovations like that, where I know Nick and I have an uncle who did that, and they had to live in the house, I think it was for 20 or 30 years afterwards, but then they forgave, I think, almost all the money on that home renovation because it built up the property values in the area. And because they lived there so long, then it was forgiven over a long period of time. I don't think that program exists here in Minnesota anymore in that city, but those are things worth looking into because that's a version of, it's not really down payment assistance, but it's home renovation assistance. So that's probably the first place I'd look. But like I said, if you're trying to do a loan, you could either do one of those conventional loans where you can add on to the house, again, call the loan officer or look up loan officers, the, Home Choice, and I'm blanking on the name right now, but let me pull this up and I'll put it in the chat.
FHA also has 2 renovation loans too, Peter.
Yep. So that was gonna be the next thing I said is renovation loans with FHA. You can do it. It's more intense. And the thing I should say about all this is they are gonna want to see contractors do the work. So if you're planning to do the work yourself,
you want a HELOC.
That's all. Yep. You want to just take the money out, like cash out refinance or a HELOC or a second mortgage. Because if you do one of these loans where they're documenting it and they do draws where they give you a certain amount of money at a time, then they check the property to make sure that the house is actually, or the renovation's being complete. They'll check it. They might give you 10% or 20%.
I think with one of the FHA products, you can do the work yourself. I think that was a new feature.
Yes,
they talked about mortgage educators talked about that this year.
Yeah, they did. Yeah. They did update it. That's for smaller stuff. You're right. They did update that last year. That's a good point.
Yeah, it's like $20,000 or something.
Yeah, it's on the smaller end. Yep. If for FHA, if you do a larger one, then you have to have FHA inspectors, FHA certified contractors, which not all contractors are. So I would say I would talk to somebody in your area, like a loan officer, call them, look it up, and just ask them, say, hey, just tell them exactly what you want to do. But the first thing I would do is go on your city and county website, or you could call them too, and just see if they have any type of renovation loan. Because some of them, I'd say the more common ones, they'll do like a 0% interest rate, or they'll give you a lower interest rate than what the banks will give you. So I would definitely check into that first, just because that's more of a community thing and it's tax dollars. Anything involving tax dollars, usually the terms are better, because if it's coming from a bank, they're only giving that money out because they're trying to make money off of it. Whereas the government, they're more looking to try to, like, it's more focused on helping people and bolstering the community. So they're not going to be as aggressive as trying to make money off of the money that they're giving out. So yeah, so that's probably what I'd do, is look at the city and the county that you're in, see if there's anything like that. If there's not, then talk to your lenders about like the choice renovation loan. Just tell them what you want to do, and they should know right away. So
I wasn't have any information. Thank you so much.
Yeah, and I'll put this in the chat too. So, and then I think somebody else earlier, if we answered your question, somebody else asking a question up here too that I told them I was going to respond to.
Interest
rates. But did we fully answer your question?
Me, yeah.
Yeah, okay.
Especially the one you say, like, from my city or what the house counties. I'm gonna check it with them first.
Okay.
But the one you say, like, can I remodel by myself? Is that I can do that, or
yeah, so
permission to do that?
Yep. So if you do that, then I would say you could ask about that choice renovation loan. I just put it in the chat so you can see it in writing. You can ask them about that, because I don't remember all the terms, like what they would let you do and what they wouldn't let you do with that. Especially some lenders have additional requirements as well on top of the standard ones. So I'd definitely talk to them about that. If you know you want to do it yourself and those don't work out, and you have equity in your property, then you, like I said, you could also do a second loan if your first mortgage has a low interest rate, like lower, like right now if you refinance, and this is very general because it depends on your credit, like how much of the house you have paid off, your credit score, income, all those things. But a 30-year refinance right now is probably around 6%, and FHA is probably around like 5.5 to 6%, depending on the lender, in credit score. But conventional 6%, that's probably the best case scenario. On the high end, it could be over 7%, depending on credit score and how much of the house you have paid off. So if your first mortgage right now is like 3, 4, 5%, you probably don't want to touch that. So then you could look at doing, like I said, a second home loan or a HELOC, which is basically like a credit card that's attached to your property. You get approved for a certain amount, and then you can either take all of it up front or just a chunk of it. Like, let's say you get approved for $100,000, you can take like 50 or 75, and you can either pay it off or you can take more draws over a certain period of time. And all those periods are different. So, but yeah, so to summarize, I would look at the city and the county and the state, but it's usually city or county for those renovation loans. See if there's any options there. If not, and you don't want to touch your first mortgage, then look at those second home loans or the HELOC if you want to do the work yourself, because they're not going to care. They're not going to ask what you're doing with the money. They'll ask, but they don't follow up on it. They're not going to send out inspectors. If you do like that choice renovation loan, they're going to want to be more involved and know what's going on with the property as you're doing that, because with those loans, if your house is worth $500,000 and you're doing $100,000 renovation, they want to make sure at the end of it, your house is really worth $600,000 or more. So they're going to be very involved. Whereas if you just take money out because you have equity in the property, they're not gonna follow up. You're gonna close, you're gonna get your money, and as long as you make your monthly payment, they're not gonna call you about it. So
yeah, in addition, what Peter said, whenever you guys are remodeling your property, make sure to get a permit. If you don't pull a permit, if it's not inspected and your permit it is not closed, if you wanted to sell your property, you have to disclose exactly what you have done in that property. So this is a warning. I keep seeing a lot of my sellers, they do some renovation, but it's not approved through the city and not inspected. So because of that, we cannot add those bedrooms or whatever bathroom that you created in that property. So you need to know exactly, you have to talk to the city. Do I need to get a permit out to do? Then after you get your permit out, after that is done, then you have to call the city and they have to come and inspect it. So for selling your property, if that does not work and you open a permit, but it is not closed, the buyer, usually Americans, by the way, they check in the city website if when this property, because they can look at your disclosure, but if you are telling them that, you know, you have done something, you're remodeling it, did you pull the permit? So make sure that whenever you get your roof done, whenever you get your AC, your furnace, you this and you that, you need to make sure, or you add rooms, all that has to be like anything that you do, it needs to get a permit, it has to get a permit. You make sure you do the permit. And if not you, if somebody else is doing the work, let them to pull the permit because they have the liability insurance, and let them to get that. If something happened, then you go after those people because they have the insurance.
Well, and the other thing, that's a very, very good point, Ida. The other thing that you want to make sure that you do is update your insurance as well. So if you go from a $300,000 house in value to a $500,000 house, but your replacement cost on your insurance is $350,000, God forbid an accident happens, you know, you have an issue where you need to, you know, go to your insurance and, you know, get the cost to replace your house. You don't want to be $150,000 short. So you want to make sure you update that replacement cost on your insurance policy as well.
And we have seen that. Ida and I actually have a client. It didn't happen to her. It happened to her sister, I think it was last year.
Yep.
It was about $100,000 short. I don't know how that happened, but yeah. So her house burned down and she got $100,000 short to rebuild her house. And I haven't heard back from them in months, so I don't even know what happened. But that's not a place anybody wants to be in. So,
yep,
yeah. But
thank you so much, guys. Thank you. I appreciate you. So I'm always listening. I'm coming to this room like I'm listening on the bottom. So really, you're doing very good job. Thanks so much. I appreciate you guys.
Thank you.
And, yeah, thanks for joining us. And to anybody else on here. Hopefully we're not too scary. I know I'm not the best looking person in the world, but you don't have to see me in person. But yeah, we love when people join, ask questions, you know, and I think even as a listener, obviously I'm talking right now, but when I listen to things like hearing real life examples, real life questions, that always means a little bit more than some made up scenario because, you know, it's real life. And yeah, so. And then there was a couple of questions above about where the interest rates are. So I always love this question because I always tell people the advertised rates you see, those are best case scenario. And Ida and I actually have a client right now that she had a lot of questions about this. And it's valid too, because it's like, okay, why am I seeing this rate, but then my rate is this? Or why is, you know, so I always tell people, it depends on your credit score. It depends on your income. It depends on if you're a first-time home buyer or not. Mm-hmm. It can depend on the lender. It depends on the lender you use. It depends on the type of loan you get. It depends on so many different things. We have a pricing tool as a broker. So lenders, they have their own programs. So if I was a loan officer for lender XYZ, we have 5 to 8 programs usually, and that's what we lend on. So if you come to us, here's your options. Nick and I are a broker. We can work with any lender as long as there's a mutual agreement there. We have to sign some paperwork. We're going to work together, all that legal stuff. But we can get rates for our clients from over 250 lenders. All those, like some lenders will be the same, but almost every single lender is going to at least be off a little bit on dollar to dollar, if not rate to rate. Right now, like even that client we have with Ida right now, there are lenders that are like $5,000 difference for the same rate cost. So really good credit. They have amazing credit, top tier. Some lenders at, let's say the interest rate, I'm just going to make this up. Let's say the interest rate is 6%. Another lender at 6%, they have to pay $5,000 to get that 6% rate. But also, and we had this conversation last week, if you want to buy down the rate, some of the lenders, the buy down's cheaper than the other one. So the one that's 6% with no buy down cost, and the one that, not $5,000, but there might be another one that's at 6%, they got to pay $1,000. Well, if they want to buy it down to 5.75, the first lender who doesn't cost anything at 6%, at 5.75, that might cost $4,000. The other lender who cost $1,000 at 6%, they might only cost $3,500 at 5.75%. So that's where, like, us as a broker, we're going to look at all those different options, and we're going to give you the final choice. Because again, our job to guide you. It's our job to guide. It's our job to teach you and explain the benefits, the pros, the cons. Because as I told that client, there's a lender out there, they get really low rates, but they're horrible. A lot of times it takes about 60 days to close with them. So for 30 days, you're fighting with the sellers. Ida's screaming at us. I'm telling everybody, remember I told you guys this was going to be horrible. Personally, I've never worked with them. I've heard from over a dozen other loan officers, though. They're like, do not do it. Everyone will hate each other at the end of it. So it's not worth it. She asked me that. She's like, I'm like, here's the lender with the best rate. It's a little bit better than the original lender we were looking at. And she's like, okay, yep, that's who I want to use, as long as it's not that one lender you were talking about. And I was like, nope, it's not. We're good. But all that to say, when it comes to rates, the quoted rates, even the ones, like I always tell people, Mortgage News Daily, that's their independent third-party company. They have a phone app. They have every day they have an update that tells you kind of what's going on. It has a tracker. You can watch it. We pay a lot more to get live trackers, so I can see right now mortgage rates are actually slightly better this moment than they were yesterday at this time, and a little bit better than this morning. Lenders won't change with every minute detail. They only change at certain points when there's a big enough change during the day, and then they reset every morning. So that's another thing too, is they can change day to day. They change based off a down payment. So going back to like what you see quoted out there is usually 760 better credit, primary residence, so it's a house you're going to live in, and it's 25% down. But that's Mortgage News Daily. That's the owner of the company told me that directly to me. So that's how I found it out, because you can't find it anywhere on the website. But again, that's an average, and they usually add in about a point. But that's not anywhere on the website. They used to show that, but they said it was so confusing to people, they stopped posting it. But that's still buying a point. So if you have a $400,000 mortgage, that's a $4,000 rate buy down. And right now, well, my phone's right in front of me.
He's gonna go and investigate and let you guys know. In the meantime, tap the screen until 50. Go ahead, Peter.
Yep.
Yep. Let's tap the screen to get to 50,000. Then I'll give you guys a break.
Today it went up 0.03%. Very, very minor amount. But it's showing at 6.2% is the rate. If you look at like the Mortgage Bankers Association, how they come out with their rates, they take an average from 75 big lenders. Some of those have buy downs, some of those don't have buy downs. Some people could have bought down the rate $10,000, other people could have taken a rate credit of $1,000, and they just average everything out. So it's meant to give you an idea, but especially with these rates that have been higher than we've been used to the last 15 years, it's people are really latching on to the lowest rate they see. You know, like I said, I have a VA client. We just did 4.625. You want to buy down to 4.625 on a purchase on a conventional loan right now, 800 credit, you're putting down 50%. That's still going to cost you a lot of money. So sometimes there's niche programs. VA, like I said, they have a lot of benefits that us regular folks don't get, but they earned it. But yeah, so it's just, it's more complex than just what's the rates today. But if you want to know, I always look at Mortgage News Daily. They're at 6.2% for conventional, 5.76 for FHA. FHA is usually about 0.5% lower, but you're paying a government finance fee. So remember that too, because a lot of loan officers promote, oh, it's a lower rate. Or people look at it, I want to go FHA because it's a lower rate. You're paying a fee. We talk about that another time. But yeah, so there's the rate is going to change depending on all these different factors. So 6.2 is the estimated rate, but I'd say that's on the more aggressive end. If you're not a first-time home buyer and you have 680 credit, your credit, or you're refinancing too, and we got to talk about, I think in 2 weeks, we'll talk about refinancing. But there's a lot of things that influence that. And I have people coming to me right now, like one is 700 credit, and they're still, the rate's going to be like 6.5 to 6.625% if they do a conventional loan. They have about 10% equity. So, but they're like, why am I seeing other lenders post 6%, 5.9%? Like, that's because that lender, they always quote 2 points. So that's with a $10,000 rate buy down. So if you spend 10 grand with us, yes, we can get you to 5.875 or whatever it is. But it's that education piece. So that's, again, where you want to talk to a loan officer. I'm a big fan of doing your own research. I was advocating that 20 years ago when it wasn't as popular. But also, I'm also a big fan of find experts in their field who do what they do and find ones that you can trust, because we can give you more information in 5 minutes than you can learn in 5 hours, because we've been doing this so long. We read it, we know it, we know what all the different terms are, we know how the markets work, we know all these different things, and you're going to pay us at the end of the day. So if you're paying me or you're paying another loan officer, guess what? We're probably getting paid about the same. How much you're paying, especially the bigger the company gets, usually the more you're paying. And banks and lenders are very creative in how they do all that to make it look as low as possible. But the truth is, we're all getting paid similar. So do you want to go to the guy who's been doing it for 6 months and sitting in a call center and just running through people? Or you want to work with somebody who knows what they're doing, whether they've been doing it for 5 years or 50 years, and actually takes the time to understand your situation? And the other thing too is you can stick with that person for life then. They know everything about your situation. You can call them in 3 years. Hey, where are we at with this? Hey, I want to do this. Okay, yep. And they should be able to pull it all up. All right, yep, this is where you're at. Okay, this is what you're looking at. All right, this is where we want to go. How is this? What's changed? That's the person I want to work with if I'm a consumer. So I would encourage that as well. Don't just call the cheapest quote you can find online, because those online quotes, they're always using best case scenario, because again, what is the point? To get you to call. And once they got you on the line, then it's like, okay, how good am I at reeling this fish in? That's how a lot of lenders are, and that's how they teach us. I got lenders every week sending me, hey, our senior vice president, sit down and join this conference call that he's doing to teach you how to basically convince people to do whatever you tell them to do. You don't want to work with a loan officer like that, because you're just a number and they're just trying to get paid. It's like a game almost. They're trying to beat a video game, and you're the video game. So yeah, I'm going to stop going off on that. But yeah, use somebody that you can trust, and then they will tell you what your rate is based off of your situation, and also how you can improve it. Because I have clients right now, we're looking at that. It's not quite time to refinance, but what can we do over the next 3 to 6 months? Hopefully the rates come down during that time a little bit more to get us in a better position. Like the one that has 700 credit, I'm like, hey, there's some potential here. We might be able to get you to 720, 740. You get to 720, the rate's going to be better. You get to 740, the rate's going to be even better. So let's work on it. Let's try to get there. And then when the time comes, just like everything, you're prepared you can take advantage, and now you can benefit from it. But yeah, I'm gonna stop there.
Perfect. So that is a good chunk of information that you give to our audience, especially people are so stuck on interest rate. So, we will talk. I think I talked about it in the past. If you guys go Gojjo Realty of my YouTube account, we talked about a lot about, what is included in your interest rate. Interest rate, just because you've seen it on the screen, it says 5.9%, it doesn't mean like you're gonna get that. So interest rate, it has its own package, what to expect, what are the stuff that needs to be done. So one of the big thing is it is your credit score. Your credit score matters, and plus how much that you're planning to put down. So, it's a good thing that Peter gave you a chunk of information that interest rates is just not only the part of your purchasing. And I get calls on a consistent basis. Hey, this lender gave me 6.5 interest rate, and this one gave me 6.2. I wanted to go with the 6.2, but I'm like, okay, did you look at it, everything? What's the fee that they're charging you both? Did you compare analysis? Did you look at both lenders, which one that it comes? And then, which lender did you like? It's not about they give you an interest rate, good or whatever, but even calculation, what are the package? Did you even look at it, like how much that they're asking you to put down? You have to look at everything. Interest rate is just, might be 25% of your processing that you need to worry. There's a lot of stuff that comes with it. People will give you interest rate and they charge you fees without not knowing you're paying points. And it happens. I have seen that. And Peter helped me to find this client that I was helping, and he was helping them, but they decided to go with another lender because there's a program that they wanted to get in, but they were about to get charged a little bit over $4,000. I think it's close to $5,000. So it was like $490. And he figured out, he told me, hey, do you know that they're getting charged points? And I did not know. When I saw it was discount point, it is a discount point, like exactly what the English says. Discount point, you think like you got a discount. I did not think that they were getting charged. So those are the stuff that we really have to look at our paperwork to understand this and that. Anyone can tell you, oh, I'll give you 3.9%, but you will pay for it. And you have to understand what it looks like your mortgage statement. So with that said, today is not about like interest rate, but you guys always ask, is it a good time to buy? What is the interest rate today? And you guys go ahead and look at it online. You guys will be able to see. But every interest rate that you're getting, it is unique to individual buyers. And there is a calculation when they put your credit score, when they put your business, your self-employed, especially we give a first-time home buyer self-employed class this week, the 1099 class this coming Saturday. If you are planning to do that, you go to my bio. There's a link. It says workshop or upcoming workshop or something like that. You go and click there and you register. I already have 11 people register for this coming Saturday morning. So we want you to be ready now before you start doing on your taxes. We talk about those things. So, case by case, everything goes through, and we have to find a way to understand with each other and, do your homework right now. Do your homework. When you do your homework, you get A. If you don't do your homework, you flunked your class. So don't run in the last minute. Don't call to your lender or to your agent when you have only 2 months to your lease to be over. And then
just to add to Ida's point, I don't know if she has a lender on there or not for her class on Saturday, but this is a perfect time, whoever you're talking to, before you file taxes to figure this out, because if your 1099 is basically self-employed.
Yep.
So yeah, if that's you, you should definitely check her class out and don't file taxes till you figure that out, because that can have a big effect on your qualification for the next year.
Yep. So that's the part of stuff that we're going to talk about. You know, don't jump somewhere that's not even worth it. So with that said, I don't think anyone has any question. I don't see anyone is in my thing. And I can say thank you, both of you guys, for coming and sit and, you know, answering question, feeding the community what are the stuff that they need to know, what are the stuff that they need to watch on. And, you know, we all are here to support whomever is out there for help. But I really appreciate you guys for taking your time, spending at least exactly 2 hours with me. We started at 2. Oh, look at that. Thank you for all of you guys for tapping the screen to 50,000. Thank you. Nick was rocking it the whole time when we were on the thing. So I really appreciate all of you guys for coming, tapping the screen, listening to information, asking, because if you don't ask, you don't get the answer. If you don't ask, you don't know what you're going. So ask. If because you're asking, it doesn't make you feel like you're dumb or arrogant or whatever the case, stupid, whatever you call it. It does not. So you have to ask a question in order to grow, in order for you to be what you want it to be. So with that said, if you have not followed us, go ahead and follow us. I am here every Sunday in my platform, YouTube or TikTok. I teach about real estate in English. No, sorry, in Amharic. On Wednesdays, I do it in English. These days, I'm coming in a different time, whenever I open time to come and to answer some questions that you guys have while I'm working. So today's Wednesday. Wednesday, we are here, you know, speaking English, but, you know, when you do your transaction, we do it in English. So you should know the word and the language and how those processes are going. So with that said, thank you. Go ahead and follow if you have not followed us. My name is Aida Tezera. I am a real estate agent in the state of Minnesota. And plus I am a team lead. I am, what else? What I do? I am a CEO of Gojjo Realty with Coldwell Banker. I do residential and commercial, and plus I manage property. So to just give you a heads up, we have a really amazing software that is going to be popping out by around May. People who is managing your own property, to make it easy for you guys, how you can process that, process it for you guys, how you can collect your money, how can you do this and do that, and how you can give your tenants their tax paperwork at the end of the year and all that stuff. We are preparing those up, and I'm using one right now, but I would like to have the community to start using it. That it makes it easy for you guys, and also to provide the information to your tenant on a consistent basis. So with that said, I will pass the mic to Peter, and then we will finalize everything with Nick.
Yeah, like I said, thank you guys for joining us. Always please come join us. Come join her other TikToks, especially if you understand Amharic. I don't usually join because I don't know that language. But yeah, come join her, support us, support her. We're here to help you guys. DM us if you guys have any questions. Like we always say, we don't charge you up front. We get paid when you close on a house. And even if you're in another state, we'll still try to help you, still try to give you good direction, all those things. So Peter Jerv, custom-made mortgages, licensed in the state of Minnesota. And we're here to help. And I will not be here next Wednesday, but in 2 weeks, I think we're going to talk about like refinancing and a lot of things related to that. And even just like property ownership from a real estate side. But yeah, thank you for joining us, and I'll pass it over to Nick.
So thanks, Peter, and thanks, Ida, for hosting this today. My name is Nick Jerf. I am a mortgage loan originator in the state of Minnesota with Custom Made Mortgages. We are a mortgage brokerage, which means that we have access to multiple different lenders. I think as it stands right now, we're signed up with about 2,000 different lenders, but we're pricing you out across 250 different lenders. That allows us to have more products and more things available to get your loan closed. So we can do the traditional financing. We can do, primary residence, secondary investment properties. We can do in 39 different states. We can do vacation homes, second homes, cabins, pretty much whatever your residential mortgage needs are, and even some commercial. So if you're in the state of Minnesota, definitely reach out. If you're looking for investment properties, we can do those in other states as well. But the one thing for us is that we have a lot of different lenders, and we can find creative ways to get your loan closed. So again, we love helping people, and we'll kick it back to Ida. She'll sign off, and we'll see you. If not next Wednesday, in a couple of weeks, then we'll see.
Yeah. Thank you. Thank you.